All right, folks, and we're live. Welcome to another Alpha Stock session where we're going to try to make sense of it all. What's happening with the market? What sectors are leading higher the market? And also what sectors are underperforming? And pay close attention to the headline news. What headline risk is out there that we need to concern ourselves with and maybe anticipate the next move, whether it is, again, to the upside, to the downside, and then look at specific stocks that are, again, performing to the upside or to the downside to make sense of it all. So with that being said, let's focus our attention to our screen here. And here are some of the main headlines driving the market today from CNBC. The Dow rallies more than 200 points to close out its best quarter since 1987. And if you recall, this is coming from the lows of March after the Federal Reserve put liquidity into the market to stabilize the decline that we were experiencing. Also, Congress injecting or passing the $2 trillion bailout package to help unemployed Americans that lost their jobs due to no fault of their own. You know, a lot of the businesses were forced to shut down because of the coronavirus. Once the Fed and the central bank and the government injected liquidity into the market, that's when we found the bottom. And ever since March lows till now, the NASDAQ all-time highs. The S&P 500 and the Dow Jones, they've recovered, and all three major indices have performed at record levels. You're going to take a closer look at that once we open up our charts and begin to look at the actual performance. But let's see, what else is really driving the market in terms of headline news, right? In last week's call, what was driving the market was the second wave of coronavirus. We had an uptick in new cases, and states that started to reopen, they are now pulling back. Now they're being a little bit slow in the whole reopening process because they're starting to see an uptick in number of cases. And you can see here with some of these headlines. I mean, look at the first one. Coronavirus update. Massachusetts tells most travelers to quarantine as New York adds states to its order. Let's see, separate from that, you have, here's why the biggest U.S. mall owner might want to buy JCPenney. Obviously, JCPenney is going through bankruptcy process themselves. You could see with the stay-at-home mandate how it has been impacting a lot of the brick-and-mortar apparel retail stores. Let's see here, wartime president has, okay, this is more on the politics side. Facebook. So Facebook removes account associated with Boogaloo movement aims at boycott. Okay, so this is actually on the steps of other major Fortune 500 companies, big companies pulling back their ad spending from Facebook. I mean, last week you saw Verizon pulling back. I believe Coca-Cola was another one of those major companies that are reducing the amount of money that they're spending in ad expenditure in the Facebook platform. And because of that, last week, Facebook stock was down 8% in one day. So we're probably going to take a look at that stock so that you can see how headline risk impacted the stock, but also from an analyst standpoint, are revenues change? Are revenues going to increase or decrease? Are their bottom line earnings per share going to decrease because Verizon and Coca-Cola basically reducing the amount of money that they're spending in ads, especially on the Facebook platform? So we can look at those things as well to determine, is it a good buying opportunity right now? Or does it have more room to the upside, to the downside? Let's see what else we have here. This is what top U.S. health officials say we should do differently for the next pandemic. Okay, there's a few there. Let me scale back up. Right here, what else? Fauci. Okay, Fauci says U.S. corona outbreak is going to be very disturbing. Could top 100,000 cases a day. Okay, well, we're seeing what's the concern is. Okay, so you have politics, you have state, you have regulators that are trying to maneuver and basically monitor the process of reopening their economy, okay? But you have, on the other hand, the stock market continues to rally even on the face of negative headline risk with the whole coronavirus. So the market is just shutting that off. and they're saying, yeah, we understand what the second wave might mean, but now we're focusing on recovery, and specifically the technology sector that is benefiting from the stay-at-home economy, and also companies just having their operations where their employees, their work staff are working from home. So on the tech side, you still have a bull market in that sector. So with that being said, let's just transfer over to the screen in our charts. And let's first look at the major indices. So you have the Dow Jones Industrial Average. This was the technical drawings that we did last week, where we actually concluded that, look, right now, the Dow Jones Industrial Average is still off its 52-week high. We are still trading in this tight consolidation range. And again, I'm in the camp that we're going to revisit this point over here, right? They tried to break this support point. We're pulling back here. We got a temporary rally, but here's the clue. Look at the volume. Look at the rally. It's down. It's down. Every time it's selling off, it's higher. It's higher. This is known as distribution. So there's more sellers than buyers. Is this going to be a short-term temporary rally where the market today was up 77 basis points, so less than 1%? And are we going to come back and retest this? And I'm in the camp that we might break this. If we break this support, where can it go? It could come back right down here. So I'm still going to leave this drawing, okay? This is my take on it of where things could go. I'm applying technical analysis. If we come back up here, and if we break this with volume, then I think we're going to break this and maybe get a little pullback and then continue to the upside. So there's two scenarios right here that I'm painting. One, where you can go to the downside, and the other one where you can go to the upside. I'm in the camp that we're going to still roll over. I'm in the camp that the market wants to break this, and maybe it can give us an opportunity to buy back on the long side at lower prices than where things is right here. So all of this is really shaping for second quarter earnings of 2020. I believe you're going to start to see companies report earnings in July, towards the end of July and early August, and that's going to be the catalyst. So right now, the second wave of the pandemic, uptick in new cases, that's what is in the back of investors' minds. But once July hit, it's going to be all about earnings. So I'm anticipating that, and I'm preparing you for that. So let's look at the next index. We have the S&P 500. Wow, the S&P 500 was higher than the Dow, up 1.2% today. See here, we have support. We are below this intermediate uptrend line, right? We're below it. If we cannot regain this uptrend, right? If the S&P 500, if the SPYs don't come back on this uptrend and stays below it, chances are higher that it's going to revisit these points right here, and it will break it. And if it breaks it, the next support area would be right here at 272. Again, I'm in the camp that the market still wants to roll over. I thought that the uptick in coronavirus, I thought that was going to be the catalyst, the negative headline risk that would, give more fear to the market and investors and force them to sell and take profits. That hasn't played out. So now I'm anticipating earnings to be the main catalyst to maybe take the market lower if the second wave of uptick in coronavirus doesn't take the market lower. So this is the two scenarios. Either we regain the uptrend above this uptrend line, that's case number one, or case number two, the increase in new cases plus a weaker than expected earnings quarter will be the catalyst to bring the market lower. It's going to be one of those two. So you can create your investment thesis, what sectors are going to perform better or worse in those two scenarios, and you begin to position your portfolio around that. And that's how you formulate your investment thesis, and you find the stocks and you execute it, you have your risk reward, and then you just wait for the market to unfold, and maybe if you're right, you'll go in your direction. If not, you limit your downside risk, and then you reassess the market and come up with another thesis, and then you do it again. All right, let's see, what about the NASDAQ? Look, wow. I mean, I'm still impressed with the NASDAQ. Up almost 2% today. Look here. It's above all-time highs, right? It's still in an uptrend, right? We can draw this uptrend here. Wow, it's still respecting it. I think we could have it there. Still respecting it. And now it's crawling back above this uptrend channel that you're seeing right here. It's still in bull territory. I mean, last week we got a little pullback over here, but look at that. Monday, today, it reclaims the uptrend. Chances are it will probably continue higher. Again, the NASDAQ, this is the leading sector. It's the strongest one out of all the indices. And what are the leading companies in the NASDAQ? You have Amazon, Tesla, Google, Facebook, Netflix. Basically, all of the FANG stocks are the ones leading this market higher. Okay? So if we look more carefully under the hood here, let's look at the main leading stocks, right? Let's look at Facebook. As you saw in the other headline, some of the major companies were pulling back their ad spending from the Facebook platform. Look at how it performed when it did that, right? This was Friday. Big decline. But now, look at this. It's being faced with a bounce. There are buyers stepping in and supporting Facebook. So this might just be a small temporary pullback on a longer-term picture of a company that will continue to grow, will continue to innovate. They'll come up with solutions to all the toxic posts that you're seeing that concern their customers. Verizon, Coca-Cola, any other Fortune 500 company that is spending ad dollars on Facebook, they have their own take on any social issues. So Facebook will figure it out, right? They'll introduce some new policies to mitigate any of that risk, and then all of the advertisers, they'll come in and they'll continue to spend money on the Facebook platform. Actually, Facebook is, I think, the best platform right now to advertise if you're an advertiser, because the cost per click or the cost per conversion on Facebook is cheaper than any other platform out there. The second biggest competitor is Google. Google search right now, the bid strategy, it's rather expensive. But Facebook is actually the cheapest platform out there. So this is why I think this is still a longer term fundamental growth story, and maybe where it's the most attractive platform for advertiser to be advertising and spending their ad dollars. This is probably the reason why it's bouncing from here. And maybe if it stays above this support, well, now resistance line, it'll probably continue moving higher, revisit the resistance of 240 all-time highs, and then just continue moving higher from there. So watch this stock, see how it unfolds. You may also want to do your own fundamental research. Take a look at earnings per share, how fast is growing. Look at revenue growth. How fast is that also growing? Do your discounted cash flow analysis and see if the price target is $250 or $300. And if that's the case, this is definitely a bargain right here. And you can even see that this is some level of support right around there. And you got the pullback, right? So this is why you have to stay on top of these stocks, monitor, see how they're reacting to the news. In real time, you can pull the trigger and make your own investment decisions. All right. So let's see in terms of sectors, what was outperforming today? Gold. Aha, there it is. So if you recall, several weeks back, we were talking about gold. We said that with all of the injection of liquidity from the Fed and the central government, upwards of about $10 trillion right now, that was going to create some sort of inflation, either in equities, in housing, in food prices. Inflation will increase in one form or another, and it will present itself in any other asset class. One way to protect your purchasing power is through gold, right? Buying gold. The more liquidity is injected into the market, the lower your purchasing power will be, right? The value of your dollar will decline over time. So one way to protect against that is what? Is gold. And take a look with the whole pandemic, how it has disrupted and dislocated several sectors of our economy. And when there's a lot of fear, when there's uncertainty, where are you going to park your money to give you capital preservation, preserve your principal, and maybe give you some upside? Is gold. So that was an investment thesis that I was formulating. And I said from an execution standpoint, if we break this downtrend right here and continue moving higher, that was going to be the signal for me that capital is flowing into gold, and it was going to give me the conditions for me to buy it. That's what we're seeing right now. And I am actually long Franklin Nevada. The ticker symbol, FNB, is the actual stock. I'm already long. See right here, we had a temporary resistance level right there. Well, this is support. If I actually draw right here, we had a small little temporary decline. Okay. But if you look at the bigger picture, this is coming from $80, right? Now, if we zoom out and look at the weekly, let's look at the weekly bigger picture. This thing is still in a bull market, right? We had a pullback, and this pullback might be the beginning of the next major move to the upside, the next leg to the upside. And that might bring it, maybe you got, wow, close to 200. If we take the first wave, the first leg to the upside, right? And if we duplicate this, then where can it be? Wow, even much higher. Yeah, this thing can bring it up almost to $200. Okay, so we're game on for that. So what would increase this trade as well? Let me change this. CMG, FNB. Okay, what else am I looking at right now to increase the probability of this trade playing out the way I'm mapping here? Simple. We now have to break resistance. We now have to break 152. If we break 152, then it's game on. The likelihood or the probability that Franklin Nevada stock will reach $200, it's in my favor now. Greater than 60%. Where am I getting 60% from? Experience. If you look at the Encyclopedia of Stock Charts, how often do they finish their projected move when they break resistance? What volume is greater than 60%? So I'm putting the odds on my favor. The first one, it's right here. We already broke this resistance. Now I want it to continue moving higher so that I can maintain my long position. All right, so follow this one. It might take 2 weeks. It might take 5. It might take 8 weeks, right, for this to unfold, for this particular trade. What's my stop out? Because I also have to keep in mind that this may not play out the way I'm anticipating. If the stock falls, I think my stop is right here. If the 139, yeah. If the stock breaks these low points right here, which is around 133, if it goes back to 133, I close my position. I take a small loss because the chances of it coming back down here increases. So I'm trying to maximize my upside and minimize my downside risk. Small little loss, big gains. If you can continue to do that over and over and over, your profit expectations is higher than your losses. And you want a positive expectations on your strategy. Very important. This is a very rule-based, systematic, driven trading strategy that I'm trying to teach you. This is high-level trading right here when you have a game plan. And when you stick to your game plan and you execute it, and there's no emotion in place driving your decision. This is a whole nother level of execution and investing that I'm trying to introduce you to that would really improve tremendously your performance, especially those of you that this is new to you. If you don't have a trading account, don't worry. Just follow this. Keep learning it. And when you build the confidence that you may want to start doing it and maybe placing 10% of your account in one idea, then you will see how it unfolds. And then you can kind of tip your toes, if you will, in the market to build the confidence like I'm showing you right here. So watch this, okay? Watch it. We're getting a bid on gold, GLD. Look at here. Oh, GLD already broke resistance. We already broke resistance, so we're bullish on gold. Watch it, okay? Watch it. What was the other index that performed well today in terms of sectors? This is the semiconductors. Oh, okay, we are at resistance, almost right around all-time highs. If we, can we go long this? Well, I would want it to break this level over here as well. You can see it here. I want it to break this. If it breaks this level, then what you want to do is look at individual stock that makes up this index, the SMH. What are those stocks that make up this index? Here, I'll show you how to get that again for those of you that are new to the call, because I see new faces here. Let's go to Yahoo Finance. Yahoo Finance. Let's type in our ETF ticker symbol, SMH. You can see it up here in my search. Vector Semiconductor ETF. Click on that. And you're going to notice that there is a selection right here called Holdings. You click on Holdings. Scroll down. Here are the top 10 holdings. So we could go chart by chart, pulling it up and see which one are breaking resistance, which one have a uptrend, the stock is in an uptrend, and that would be the best stocks to buy. Let's go through this exercise. Let's pull them up right here, side by side. And actually, this is a good exercise for me as well. I haven't been looking at this. And I am seeing now, I'm getting ideas to position my portfolio and be long semiconductors. So what are some of these stocks? Let's go with Intel. Well, I don't like Intel because it's a double-digit stock. It's at 59 bucks. I like to trade stocks that are going to move fast, high-price stocks, and also stocks that have low amount of shares outstanding, but revenues are growing fast. Earnings per shares are growing fast, because those are the ingredients or recipes and characteristics of a stocks that will double in a short period of time. I'll show you a list of those stocks shortly. Let's look at another stock here. Let's see NVIDIA. See, I already have my alert set up right here on NVIDIA. Big picture, uptrend, beautiful. Okay, short-term picture, if it breaks 384.49, I'm long. I'm going to be buying the stock long if we break 384. It's in harmony with the overall index, okay? And you could see capital flowing into this stock and also the entire industry. Look, here's what I mean by this. See this nice upward, uptrending stock? Compare that to an airline stock. Let's say American Airline. Look at this, right? It's basically down. You had a nice pop over here, short coverage, and then this is also retail investors coming in, but look at that. All of those gains wiped out, gone. Let's look at another stock here. I think Hertz was one. Hertz is about to file bankruptcy. Where's their ticker symbol? Look at this chart. It's the opposite, right? You don't want to be buying stocks that are coming down like this. No. You want to be stocks that the fundamentals are strong and have an upward trend line like this, and they're breaking resistance, all right? So I'm definitely going to be looking at NVIDIA. Well, I'm waiting for it to hit my alert. What's another one? ASML Holdings. This is nice. It's up here, right? It's just consolidating. I should probably set an alert on this one. You know what? I'm going to set an alert right here. Right click, create alert. Above, yes. Okay, so if it breaks, so where's the alert? So if it breaks 370.15, I'm going to get an alert, and I'm going to re-examine this if I should take some shares long, breaking this point. Now, for those of you that are watching this and you might create your own list, do not put no more than 10% of your account in these type of trades if you're going to follow my lead, okay? Again, do not put more than 10%. If you're new in this game, do not put no more than 10%, because what would happen if the stock breaks and then comes down, if it's a failure, if you don't know how to manage risk, that loss can continue to compound to the downside. Then you might be defending a loss where you might throw in more capital, and if the stock continues lower, you might be down 10, 20, 30, 40% just in one idea, because you don't know how to manage risk. You don't know how to stay in line with your game plan. You're not disciplined. This is why I'm telling you, don't put no more than 10% in one single idea to learn about the process, the strategy, and how you're supposed to be buying stock when they're breaking resistance. I hope that's clear. I cannot make that any more clear or emphasize it enough. These were the mistakes that I made in my earlier days. And I can tell you stories where I had a stock and every big loss starts with a small loss. I will be down 1,000. Then 1,000 would turn into 3,000. Then 3,000 would turn into 8,000. Then 8,000 would turn into 15. 15 into 20. Then $30,000 losses. They continue to compound because you're there defending. And when it's the first time you're doing it, you just don't know how to control your emotion. So I'm trying to show you the right process and teach you the right discipline and the rules to maintain your equity curve to the upside rather the other way around where you're taking big losses. That's what destroys accounts. That's why a lot of newbies blow up their account because they don't know how to manage risk. And one of the ways to keep you in the game is through diversification. Don't put no more than 10% in any one single idea. Once you understand the process, once you're good, and let's say you doubled your account in 6 months or even 12 months, if it takes you that long, but you know how to manage risk and you know that your gains are higher than your losses, then okay. Then you could go in and put 20%, maybe 30%, because you know that you know. But at the beginning, keep it tight, all right? So this is another one that I'm gonna be watching. Let's see right here. What's another stock in the semiconductor space? Broadcom. Okay, it's just consolidating here, but ideally, well, this is a continuation pattern. This is a wedge or triangle. This is coming from here, from this point. This is also, it's not a bull flag, but it's just a continuation pattern. If we break this like we've done today, chances are that we'll continue higher. But where would be the ideal place to buy this stock? If it breaks this swing point up here. If it breaks that resistance point, 328, and then we'll probably continue. But I'm not gonna look at this one because it's not trending around its high. You can see up here, right? You still have a lot of resistance at this area on the left side of my chart. You can see it right here. Let's look at another one, Texas Instrument, TXN. Yeah, same thing. I'm not gonna look at this one. Right, you saw NVIDIA and ASML. They're better looking chart to the upside than Texas Instrument and Broadcom. One last one, AMD. Look at AMD. AMD is not like an NVIDIA. So if you want exposure to video cards, graphics between AMD and NVIDIA, I will go with NVIDIA because it has the strongest stock. And you see it, it's trading almost at all-time highs. So this is what I look for, all right? Let's see, what other index outperformed today? Energy. I mean, this is a dog. It's a dead cat bounce. Look here, a year out, right? See this? This is basically in bear territory. I wouldn't be investing in energy unless I was doing it from a shorter time frame and I'm capitalizing on small little moves, swing moves within the entire energy index. You may want to look at individual stocks within this index, but I wouldn't recommend you to look at energy. Focus on the sectors that are moving higher, the stocks that are making all-time high, breaking resistance, wet volume, because it's easier to compound your money on the way up, right? It's infinity to where the stock, in theory, a stock could go, from 100 to 1,000 and even more than that. But to the downside, a stock basically can go from 100 to 0. That's only 100%. You could lose 100% of your money. But on the way up, you can compound it 3, 4, 5 times even more. That's why you make more money on the long side than on the downside. All right? Let's see here. What about worst performing sector today? Airlines, jets. This is the ETF for airlines. Look at that. Right back down. Let's take a look at a few airlines. Is this that Southwest airline? Let me remove this. All these drawings. Yeah, this is the other area that I have an alert, but there's really, I wouldn't even bother drawing anything, and I could draw it if you want me to, but here. So here you have support, right? It bounced from $31. Now you have resistance up here around $42. So this stock will probably trade in this range for maybe days or weeks, but I wouldn't do anything unless it breaks this. If it breaks this to the downside, chances are that it's gonna come right back down here. So I would be short. If it breaks $42, then chances are it'll continue higher and then I will be long. So you have a defined, okay, area for where you should short or go long the stock. Anything in between, you should not touch it. Don't do anything, because this is where a lot of newbies get sucked into the market, and then you try to day trade it, you try to swing trade it in between this range, and you're just churning your account. You're churning your account. You don't want to do that. All right. Let's look at another one, another airline. I think we looked at American Airlines. Same thing. Well, you have support, your inflection point. You could say it's almost right at support. You might get a little bounce. You might get a little bounce temporarily, but I wouldn't even play that bounce. I wouldn't waste my time in this. So I'll just go to next. I'll go to another stock. What else do we have here in the airline space? JetBlue? What's the ticker symbol for JetBlue? Let's see, JetBlue. Let's pull up. JBLU. Yeah, same as American Airlines. Comes down from where it broke, support. Are we gonna get a stronger bounce than this? Maybe. But again, I wouldn't be playing the airlines because it's a weak sector. It's in a recession territory right now. What the airlines are experiencing from an economic standpoint, fundamentally, it's weak. I wouldn't trade this, all right? So with that being said, now let's look at stocks that are actually leading the market higher. For example, Tesla. This is what I mean. You see this here? Perfect, textbook. Breaking resistance, wet volume. This thing will probably continue higher. Watch this stock. As homework, if you don't have access to, this is Thinkorswim, open an account with Thinkorswim, or just go to stockcharts.com. Watch this stock for the next 2 weeks. See if it's gonna be higher in 2 weeks from where it's at right now, 1079. Watch it. This is why I say wait for them to break resistance. Remember SML, the semiconductor stock? I'm waiting for the same pattern. Remember NVIDIA? Beautiful. I am waiting for the same pattern. I mean, I just get excited with these things. So let's go back to Tesla. Will you chase right here? No. Do not chase this stock. You missed it. But it's okay. Don't worry about it. I'm teaching you the process. There's going to be so many good ideas like this that I'm going to start sharing with you guys. And then later we're going to upload them before they break on our Romero Alpha platform. But I'm teaching you the methodology. Okay, so it broke here. Where did it happen before? Over here. See here? It broke it. Come on. Can I get it? There it is. See? It broke it here as well. And then it moved higher. Then it consolidated. Then it moved higher. So these are the patterns. Here, back here as well. See, breaking swing points. You could have bought it here. Moves higher. Comes down. Breaks this point. Let's get it again. Right there. Moves higher. Then they had earnings. Gives it back. Supporting resistance. There's people who are supporting the stock. Rebounces. Consolidates. Then breaks. Again, it's the same pattern over and over. When stocks are moving higher, this is how they do it. Okay? It's very rare that they make parabolic moves like this. This like that, this is very rare. They don't happen all the time. But if you really stick to the technicals and the fundamentals, you could have bought it over here when they reported better than expected earnings per our alpha stock characteristics. Better than expected earnings. They break on volume, wide price spread, stronger fundamentals. This is why the stock increased. And then over here, you see the resistance, right? Then it breaks, moves higher. Here you had a little pullback, breaking resistance. Here again, you have a little pullback, breaks resistance, and continues higher from there. So I'm just teaching you the process so that you can recognize it, and then you can put the odds on your favor. So this is Tesla. I think this is textbook. This is classic. So look at another one. Let's actually pull up here some of our lists. Alpha lists. Could go through some of these other ones. But let's look at Amazon, one of the FANG stocks. Same situation with Amazon. See here? Breaks resistance. Right here. Broke it. I mean, it took a few times, right? Here it tried, then the next day they reported earnings, gaps down. But there's so much demand for this stock that it continued moving higher, tries to break it again. We have a pullback in the overall market. They take it down. But again, there's so much demand because the fundamentals of Amazon is so strong. They're probably the best company in the world right now. There's demand. It breaks it, continues higher. Then there's a pullback. up here, on your next swing point, breaks it. We had a pullback last week, you're seeing it, but look at this. It's coming back up and it'll probably continue higher. We have a $2,900 price target on this stock per our case study on Amazon. Also, you could draw a short-term uptrend right here. Okay, it's still respecting this uptrend, and there's another one right here. Okay, so just follow the price action because it releases a lot of information, and then you can combine it with the fundamentals, right? I just finished doing our case study, which is about 13 hours of doing the due diligence, understanding their warehouse, their operations, all the different segments of the business, how fast they're growing revenue and earnings. We did a DCF, we did comparable company analysis. And our base case, the Wall Street case, we came up with a $2,900 price target. So there's still more move to this. When's the next suggested buy point? Breaking resistance, breaking 2780 with volume, and chances are that will continue. So I'm watching this stock. So again, keep this one on your watch list. Let's look at Google. Okay, see here, Google's a little bit weak. Google's a little bit weaker. You have the all-time highs around 1529 up here. It's nowhere near that. I just gave you and showed you several stocks that are near all-time highs. Google is a laggard. Look, Google had a, wow, look at this red volume. That was on Friday. Someone sold a lot of shares. And then you have more resistance over here. Would I be a buyer of Google? Absolutely not. There's better looking stocks up there. If the market rolls over and this down day with this volume bar, this might be an indication that it will come back and revisit this point over here. So you're just getting a temporary bounce from getting another move to the downside that will bring the stock probably down to 1300, or maybe filling this gap right here. Okay, so it's patterns, folks. Understand them, draw them, and you could do this on any other stock that you're looking at to train your eyes on recognizing these patterns. All right, so separate from these stocks, let's look at other stocks in my watch list. Okay, this one, it's about to break. Look at the volume. Okay, let's look one that has actually performed better so that you can see what I'm referring to a lot more closely. Zoom. See Zoom, what I mean? Breaks resistance over here back in May. Look where it's at now. See here again, breaks resistance from 224, now it's at 253. All right, let's see Restoration Hardware. Okay, see back here in May, breaking resistance, what volume? Continues higher. See here how I already have set up my resistance point? If it breaks, then I'll probably take this straight to the upside, to the long side. Let's see here, another one. Wow, this is just a monster move. See here, breaks resistance, breaks it again, and then you have a nice continuation to the upside. This is what I'm preparing you guys for. To buy stock the right time and ride them till they stop. This, how many months is this? So the first entry was in April, 1, 2, 3, 3 months. From 100 to 172, that's 72%, folks. 72% return on this stock in about 3.5 months, give or take. This is what I'm preparing you for, to capture moves like this. Put 10% of your portfolio in this one. You have 10 stocks like that. They have similar performance. You can be up over 50%. Not a mediocre, I mean, I consider mediocre up 10%, 20%. It's still good, but when you're good and you understand this, then you can have above average performance, 40%, 50, 60% return year over year when you understand this. So that's what we're working towards. That's what I'm training and preparing you to be able to do this. And then you back it up with the fundamentals, the sky's the limit, okay? And why is this one moving? It's because they have really strong fundamentals, all right? Let's see if there's another one here that has actually done something similar to that is very clear, textbook. Oh, this one. See? Breaks resistance down here back in April, around 108, comes up to 208, comes down. Right now is flirting with breaking resistance right here. Okay, so is it going to continue higher? Perhaps. But I'm a little bit skeptical because this thing doubled in a very short period of time. I mean, if we go back to the beginning of the year, February, went from 80 to 223. More than double in a short period of time. So I'm a little cautious on this stock breaking this resistance over here. So if I'm not long this stock, by the way, if I was long, I will be watching it very carefully, and then I will set my stops and keep raising my stops as the stock continues moving higher. Why do I say that? Again, because it more than doubled in a very short period of time. And this is also a very volatile stock. Look here, right? In the beginning of June, 150, now it's at 223. That's volatility. That's why price spread. So you want to be careful with stocks like this because they can pull the rug underneath you, and before you know it, this stock could be down 20%. So just be careful. All right, folks? So with that being said, let's look at our stocks in our alpha list. So if we pull up here, Romero Alpha, actually, let's go to Romero Alpha and go through the list of stocks that I've provided you with. Community watch list. Let's close this. Let me maximize this. Okay, so let's see how these stocks are performing. So you have Beyond Meats. Okay, I have okay, that's an alert. If we draw our uptrend, yeah, it's below the uptrend right now. So I wouldn't be buying this stock right here. I would either wait for it to break this point right here, or comes back inside my uptrend channel, okay? And then maybe it can give me an opportunity to buy it before it rips higher. But this is a stock that I have in the list because revenue are growing high double digits. Look how fast it's growing in 2020. Look how fast it's growing in 2021, 22, and 23. Let's look at the next stock in the list. LVGO. Well, we already, I mean, you could buy it if it breaks, let's say 78. Yeah, if it breaks 78, continues higher, probably gives you an opportunity to buy it, okay? But we could have bought this at 64 about a week and a half ago. But put it on your watch list so that you can watch how these stocks move up. They don't go on a straight line move. They move up, they come down, consolidate, then they make another leg to the upside, all right? Let's see here, C Limited. Okay, this is one that we're watching. This is your resistance point, okay? I mean, the same thing. You can see here how it consolidated for quite some time. See? Tight consolidation, breaking all-time highs. Then it breaks it, then moves higher. So that's hopefully what we can expect for this one as well. SDGR, this would be the final one that I'm going to look at. Yeah, we already missed this one. I mean, it broke at 76 last week. You wouldn't chase. Wait for them to consolidate. Wait for a pullback. Wait for it to consolidate, and then you can buy it breaking resistance. Let's do one more. Datadog, is there one of these that hasn't broken yet? D-Dog right here. If it breaks 92, then you can take it because it will probably continue moving higher. Look at the revenue growth on this one. 2020, 55%, 2021, 34%, and the following year, double digits. Not many stocks are growing this fast in the market right now, all right? And one more, ZS. Ooh, this is another one. Okay, I'm waiting for this one to break as well. So it's in its channel line, resistance up here. If it breaks, I think, well, I have my alert at 112.69. But the ideal point to buy it is breaking 114, the high of this swing point right here. And chances are that will continue to the upside. So monitor these stocks, folks. Draw your resistance point. Set your alerts and see how they unfold. You need to go through several cycles of this. And what I mean by cycles is several bull markets and several bear markets so that you can see on the upside how they unfold. And what you're going to learn is that when a stock goes, let's say, from 100 to 500, they don't go in a straight line move like that. No. They go up, they come down, they pause, then they go up again, they come down, they pause, and they go up again. And you buy them when they're breaking resistance. Once you're more experienced, you could buy the pullback. You could probably buy right here. You could buy the pullback. But there's more technique, there's more disciplines that you need to learn before doing that. So I'm just introducing you right now, but later as this unfolds, as we continue to do more of these lectures, and as you continue to increase your knowledge base, I'll share those things with you. It's a little bit more advanced, but right now I have to introduce you to specific principles and the right way, one step at a time, because it can be information overload, all right? So with that being said, I'll open it up to any questions. Any one of you has a stock or have a question that you want me to answer or even pull up here on my screen, now is that opportunity for you to do that. Okay, so let me just move this down here. Let's see. So there's about 10 of you on the call and no one has any questions or any stocks. So I'm assuming that everything is good. I'm assuming that this is clear. Breaking resistance, continuation patterns, strong fundamentals, high revenue growth, strong earnings per share growth are all the ingredients that you need to really give you a roadmap or an execution game plan, all right? Reed, let's see here. Curious about how you manage two investment thesis in terms of your action. So how do you manage multiple investment ideas? Like when you decide to start selling, for example. So these in terms of your action when you begin to manage two investment, or okay, managing two positions. Okay, and that's a good question. The more positions you have in your portfolio, the more complicated it gets because you're constantly keeping an eye out on them. The way I manage it is that I already have stop orders put in place out there. So for example, let's look at Spotify. This is one that is doing very well, right? So look at Spotify. When it breaks resistance, let's say at 196, as soon as I buy the stock, I already have my stop order in place. I don't watch it. Then I watch the stock the next day or the next day after, see how it continues to move, and I begin to take profits after it hits my price targets. I might sell 50% of my position. But to protect the downside, automatically, when I take the trade, I put the stop in place and it's just there. Now I don't have to look at the position and massage it all the time. It's already there. I have my orders in place. So that allows me to have multiple positions. And if one of them stops me out, then it stops me out. But that's because I have my stops order already in place. And every idea that I'm taking, you're going to realize that they're following from a technical standpoint. They're all following the same process, breaking resistance to the upside or breaking support to the downside if I'm short. As soon as I take the trade, I already have my stops orders out there to protect me from the downside. Whenever I'm not in front of my screen, whenever I'm not looking at the position, those orders are in place as an insurance policy to protect me from my downside. But when I'm looking at the stock, I'm thinking about the fundamentals, I'm thinking of the price target, I'm thinking about the market condition, I'm thinking about the entire industry, and if everything is aligned, plus the pattern, then I take the trade, and automatically I have my stops in place. So that's how I'm able to have 5 or 6 positions all at once open. That's how I'm able to massage them. And then also, every night I go over them. I look at them. If I need to increase my stop orders, I move them up and so forth. That's how I'm able to manage them. All right? So I hope that gives you a little bit more clarity on how to manage some of your trades out there. Okay. Let's see here. For example, you short the SPY now or wait for certain indicators. I wouldn't short the SPY now. No. So let's put up the SPYs. I wouldn't short the SPYs right now. I will wait. My indicator is my price level, support. If it breaks this point right here, as soon as it's breaking it, that's when I take the short. And I take the short, and then I have my stops waiting to stop me out if it reverses and goes against me. So that's how I execute them. All right? Here's another example. I did it on Facebook, right? As soon as it broke, this here, now this is a little bit more technical. You see this line right here that I have? Very tight, right? So we have the first downdraft day. This was on, I believe this was Wednesday. Then on Thursday, we had a little bounce. And I was looking at Facebook and I said, okay, if we break the lows of Thursdays and Wednesday, I'm gonna go short the stock. And it's just so happened that we had that news hit the next day. It breaks it, I'm already short, and I believe I started showing like at 230 over here. See how I was short at 230. But the high of the day, that was my stop. I have my stops in place at the high of the day. So I took the short at 230, my stops was the high of the day, and then I just set back. Then on Friday, I saw where it closed, I lowered my stop. I believe it was right here, like 221 from 216. If it came down to 21, at least I'm capping some of my profits. Then on Monday, when we got this gap, I closed my position. I took my profits, right? Because it gapped down, that was a give. It extended my price target, and I just took the profits. So this is a little bit more technical now when I'm looking at the previous day's lows to take a position and use my stops in place. So that's how I did it for Facebook, which is very similar to the SPYs. If we break this point right here, and I see that we're down, let's say right here, like at 296, I'm gonna take the trade. I'm gonna go short, and I'm gonna put my stop basically right at 299. And if the trade works out, great. If it doesn't work out, at least I have my insurance policy. I lose a little bit. How much? I maybe risk 1% of my portfolio in this one trade. But the upside, I may make 4%, 5, 6%. So you're starting to see the risk reward. You need to have that on your side. Okay, buddy? I hope that gives you more of technique on how to place your stops and execute an idea. Is that clear? Okay? Yeah? All right, you're welcome. All right, folks, so I'm gonna end the session here. I don't see any other questions. So go back, watch the lecture, identify your point of inflection, look at the strongest indices, look at the best performing stocks within that index or ETF, and then start drawing your support and resistance. And once they break your resistance level to the upside, then you can take the trade. Same thing to the downside. If you're gonna short, they break your support points, take the trade, and then make sure you place your stops as well to protect any downside risk. So with that being said, folks, I'll end the session here, and I'll see you in the next one. Take care.